Commercial real estate is one of the few asset classes in the world where valuations have significantly reset. Private real estate valuations are down 20 to 25% in the US and in Europe. Public valuations are down around the same amount. We think this is a cycle going through a normal reset. That's hard to understand because there's a lot going on and a lot of noise, but let me explain what I think that means. Listed REITs trough first because they're leading indicators in both downturns and recoveries. Listed REITs troughed in October of 2023, and they're up more than 35% from those levels. Private valuations troughed 12 to 18 months later. We've now seen 5 consecutive quarters in the United States where total returns are higher. It's 6 quarters in Europe. There's actually something that happens, though, on a lagging indicator that I think confuses a lot of people. Distress in the commercial real estate markets doesn't peak out until after private valuations trough. Why is that happening? Well, it's part of the grieving process. Banks don't like to sell distressed loans into distressed markets. They like to sell distressed loans into stabilized markets. So that's where we think we are. You bring up a good question, though. What about interest rate cuts? You hear a lot of commercial real estate professionals saying, we want lower interest rates. That's not our view. We want stable interest rates. And the reason I say we don't want lower interest rates, and I'm really talking about long-term interest rates because commercial real estate borrowers finance themselves with long-term interest rates. If you have meaningfully lower interest rates, be careful what you wish for. That actually might mean a weaker economy. That might mean tighter financial conditions, wider credit spreads. That's not good for any risk asset, including commercial real estate. What we're really rooting for here is stability. That's what we think the market needs to see. That's what we think commercial real estate investors want to see.
I can explain something to you, what I've learned about commercial real estate business.
Yeah.
It's controlled by these Morgan Stanley guys. They're everywhere. The Morgan Stanley commercial real estate business is by far the biggest and best on the street, but it's a cabal. They leave Morgan Stanley and they put their tentacles all around the commercial. It's a total scam. They're everywhere, and nobody's better at it than these Morgan Stanley folks. Rich, in the U.S. here, have we troughed in, let's say, office? Have we troughed in office here? Because I'm hearing some positive murmurs, even about like New York and San Francisco.
Yeah, sure. So it's really hard to, and I'm going to be super cliche here, paint office with a really broad brush.
Yeah.
And the reason I say that is JLL has a great statistic that 90% of vacancy in the United States is concentrated in 30 to 35% of buildings. New York City, really strong. It's seen a really strong rebound. San Francisco, beginning to see some real signs of life.
AI.
And if you're a long-term investor, you're pretty bullish on San Francisco because of how beaten down it is. I think the market is still trying to figure out what the high-quality buildings are from the lower-quality buildings. We actually don't have an office problem in the United States. We have a Class B and C office problem.
Those older buildings, you mean?
100%. And if you were renting a Class B and C office property prior to COVID, you probably didn't value the office experience. Here's my ultimate point with office. I don't know when it bottoms. I'm not really good at picking bottoms. Other people do a better job of that than me. But I do think over the medium to long term, we're going to look back and we're going to say the office sector is one of the sectors that performed really well over the next 10 years. Usually last cycle's losers aren't next cycle's losers.
Yeah, okay. So if Class B and C is sort of not the place to be in terms of office, is it the place to be when you're thinking about converting office to residential, which we've seen a lot of in some of our major cities?
Yeah, highly attractive investment thesis. Really hard to do in practice. There's probably 150 to 200 buildings across the United States where you can actually do it. Why is it working so well in New York City? Well, it comes back down to how you think about affordability in the United States. We're really big believers that you don't need to regulate what you have. You need to build more of what you don't have. We don't have enough housing in New York City, and frankly, we don't have enough housing across the United States for various different reasons. So I'm a really big proponent of converting office into multifamily. It's just not for the faint of heart, and it's a lot harder to do in practice.
And probably pretty expensive to retrofit, is it not?
Yeah, it is. In many cases, it's actually easier to raise a building, to bulldoze it and build from the ground up because it's not that much different. But if you have the right floor plate in office and convert it to multifamily, really lucrative investment thesis.
That's true. I never thought about it because when we raised and built a home, I was shocked at how cheap it was to tear down a home. The guy could have quoted me 10x what he quoted me, and I would have paid it because I had no idea.
Because it's really about the land it's sitting on, right?
Yeah.
And location.
This dude brought in like a backhoe and just knocked it down in like 15 minutes.
Crazy.
I mean, it was unbelievable. I didn't understand about that. All right, so where, Rich, is the best value out there in the broader commercial real estate these days? Where are you guys seeing it?
Yeah, there's three things that I want to talk about today. The first point, you can't be talking about commercial real estate and you can't be talking about markets if you're not talking about AI and data centers.
Okay.
So we think data centers are really interesting, but with a nuance. First of all, I think it's important to unpack AI demand from data center demand. Data center demand is constrained by land and power right now. You actually have way more demand than you have the ability to create data centers right now. That's the first point. The second point is when you're investing in a data center, you're actually investing in infrastructure. The land, the ability to power the land, the fiber that goes to the land. The third point, which I think is a nuance that the market's just now beginning to understand, is not all data centers are created the same. When we think about data centers, we think about cloud data centers. That's when, like you and I are on Bloomberg right now. It uses cloud. There's AI inference, which is when you and I go on ChatGPT and prompt ChatGPT. And then there's generative AI. Generative AI is training models for future AI demand. We're really quite bullish on cloud and AI inference. We're much more cautious on generative AI. But we think focusing on cloud and AI inference, which is actual existing demand, that's a really interesting asset class. We're a developer in the United States, and we think we can develop these at unlevered IRRs and call it the 20% range, which ends up being really attractive. So I'll pause there. You might have questions about data centers, and then we can move on.
I don't think we've hit a topic where we haven't talked about AI. It is infiltrating just about everywhere. Real quick, Rich, where within commercial real estate can they benefit most from AI?
Yeah, data centers number one, but it's actually helping the entire world in a lot of different ways. I'll come back to what you were talking about office. There's a lot of questions about how AI is going to impact office. The reality is, I think we're still early innings about how it's going to impact office. What workers are going to be upskilled, what workers are going to be downskilled, what workers are going to be outskilled. But there are going to be markets that benefit significantly from AI. It is changing the world, and commercial real estate is a big beneficiary of that. So we think there's going to be a lot of efficiencies that are driven by AI.